The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome back, folks. You get the Dow Industrials right now down 12. Nasdaq is down up 27. S&Ps are flat. And folks, if you haven't test drove the Nadex platform, come over to our website at TFNN.com. You're going to see the banner on the top or on the side. You can hit that banner. You're going to bring the platform up. We can explain to you how these contracts work, and we're going to have some action right now because what we have is this. I'm going to go right to the gold market first, okay? So check this out. Gold on Fridays, folks, bottom line is that, man, they can slam it, and they like to slam it good. So when we take a look at this, what do you have? You have two large sells in a big way, too, okay? If we take a look at this, though, I want to show you something here, okay? So if we go up to 1204, just looking at the ABC structure on the way down, you get 1204 is the high. You come back down to 1185, so you get 17 bucks. You go up to the C at 1197, okay? 17 bucks is what? Is 1180. Bottom line was that we hit 1175. Guess what? 1175, you come over to the Nadex platform. You turn around, and if we even do the 10, let me see this. This is the number right here. So check this out. Where you want to go, there it is right there. It's a $34 risk for $116 gain. You know, that's one of them that you could basically do out there. That would be, you're risking $34. Now, your max there is 116. If we go to, let me see, 830 to 1, 75. 70. This is probably a better one. 1 second, hold on. 78 to 322. That's not bad. Let me just look at a binary for a second and see if we're happening with a binary right now. So on a binary, we have inside gold. And if we go to 130, okay, so if we look at this, so check this out. Well, here, what we want to do simultaneously is you want to go over to the dollar, too. See, here's where the divergence is, folks. The dollar index, okay, has done 38,000 contracts, okay? The 38,000 contracts, you're coming into 57,000. So that's basically setting up that you are breaking, you broke this small swing point here, which has 57,000. We'll do 57,000 contracts. You take the A point on this, which is 127. Your B is 97. Yeah, that's $3. Which your C is 98. That gives you 95. Well, your swing point out here is 96.31. The high volume swing point down below is 94. So that's saying the way the dollar is set up is that the dollar also wants to go down there. Now, this being a Friday, this is always cool on a Friday. This is what's so bizarre about it, is that on a Friday, the market has a chance to always whack gold. That's what it comes down to, particularly when it's weak. That being said, we go back over to that gold market, and you take a look at the gold market. The gold intraday just did an ABC structure on the way down. So what are you looking for? What I'm looking for specifically is this, is that you're looking for, you did the extension on the way down. The last sell was dramatic, 18,000 contracts. That's a big number, folks, okay? The first sell on the 10-minute bar was 2,300 contracts. The second was 18,000. That took everything out. All your stops are taken out down there. So what does that say? That says you can bounce now, and the bounce can actually go to 1188. So if we go back over to the Nadex platform, and we go into the dailies, 1188. Where is 1188? So that's April 24th, time left. There is. Okay, so this gets interesting. Let's see what we got here. We're 1176. If I say it's better than, wow, this is a cool. So check this out. Even 1184, that's even better. 1 second, 1184, 1181, what would be the $24 to 70? I'll tell you, no, so that's 1181 by 130. That's not bad. You're risking $24 for 76, but you can get 1184. This gets even more bizarre. You can risk $10. Yeah, you can risk, okay, at 1184, that's not a bad one either. So check this out. This is how amazing this platform actually is. You don't have to blow your brains out here. On 11.8, so this would be a 130. 1184 is you're risking $11.50. Bottom line, that's a decent trade out there. If you want to take a little more risk, you get the $25. I wouldn't. That's 1181. That's only $4. That's a good one too. That's $25 for $75. And what you want to keep your eye on out here is the dollar index. And the dollar index, folks, okay, is going nowhere. 1183, yeah, at noon. Okay, hold on. Let me look at that one. 1 second. 1183 at noon. Where's the noon one? There's the noon one. It's got to be fast with your fingers out here, folks. No doubt. 1180. What was out, Jay? 1 second. 1183, $12. Okay. Where is she? 1183. 1183. How's 1 second. Sorry about this, folks. 1183. I'm having a hard time finding the 1183. 1 second. Hold it. Am I missing something? I had 1182, 1184 on the binaries. Hold on, make sure. Thank you. 1182.70. Sorry. Thanks, man. There it is. Okay. Yeah, look at that. Okay, so that's 1125 right now. And that's a number. Yeah, no doubt. $11 for $89 to noon, which is only 10 o'clock in the morning, right? That's a number. That's a good number. That's a good number. Now, what also happens is this. That inside that number, folks, okay, you don't have to stay to the end of the deal here. That's the bottom line. And that's really important to understand also. If we go over and when you're looking at, so gold in general, okay, this is what ends up happening with gold in general. With gold in general, on Fridays, it just loves to get slammed. If we go over to the GLD, now this is another way you can look at this baby. The GLD, which trades at 10% of the price of gold, same thing ends up happening there, okay? Bottom line is that you come down, first leg down, you did 484,000 shares. Second leg down, you did 600,000 shares. Bottom line is that they slammed, and this is what's cool, really understanding this. They slammed it both at the same time. They slammed it inside the futures market. They slammed it inside the GLD. But guess what? That's it. Why am I saying that's it? Because what happens is that when there's no more sell stop orders underneath the market, folks, okay, what traders do on a continual basis, you slam it down. It's a Friday. This is a trade that basically kind of just goes over and over again. So they slam it down. You slam it down, okay? They take out all the stops. Then what do? They turn around. They go topside again. And that's what you're I suspect, gonna see out here. And where I'm coming from is this, is the aspect of the dollar index is still down. Dollar wants to go lower, okay? As the dollar goes lower, that's all that matters in the gold market. It's basically a dollar lower, gold higher. Dollar higher, gold lower. We'll see how this whole thing shakes out, but this one's a classic, man. It's absolutely a classic. Because what you'll have inside here also is this, is that the gold market itself, this is, let's see, how many times have we been down here? If we take a look at this, you're going into We get 93,000 contracts. Your benchmark out here is the 150,000. And what you have is this. When you come down, and you come down really hard, which we did on Wednesday, that in itself takes a huge amount of sells out of the marketplace, okay? Yesterday, you go sideways, you come back down again, and you come back down hard. You get to the 1180, which the 1180, by the way, is your benchmark. The 1180 in the benchmark is the April 1st lower price point. That's where we went topside from. If you're a bull in the gold market, you want to see this thing close above 1180.50 today, by the way, okay? Because what you're going to have is this. If we go take a look at this and we put this on a continuous contract, what you're going to see, and I'm going to put this on a weekly, what you're going to see is that you have the 1178.60 on the continuous contract. That's the number on the continuous contract. What you'd really like to see, what I'd really like to see, I'd really like to see this thing trade close over 1187.40. Why? Because that's how we came off the bottom. That's where we've been the last 4 weeks, and that's an important number. That's how this baby shakes out. Right now, you have the Dow Industrials down 2, Nasdaq is up 31, S&Ps are, S&Ps are down 2. The gold equities themselves. So check this out. This is another way that, as you're watching this gold market, what you're going to be looking for. You take a look at Rango Resources. There's no sellers. There's no sellers, folks, okay? This is a beautiful thing. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. We have the Dow flat. Nasdaq is up 32. S&Ps are up 2.5. Gold's down $16. We're going to be right back.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow up 7, Nasdaq's up 33, S&Ps are up $3. Now, let's go over to the S&Ps. If we take a look at the E-minis first, what you have out here is this. We have hit 2113. The high out here is 21. That doesn't make any sense. So yesterday, the high was 2114. It's interesting when you look at this. The 2109.75 was the high that was generated out here on the 25th. What is surprising for the general market out here today is that bottom line is that it can't get up and over this baby with real juice. You know, in fact, what you have is that the first sell at 0930 this morning was downtown. You know, so where that sets up, which is really unusual coming into this market on a Friday, is that if we go over to the SPY, what you're going to see is that, bottom line, the SPY can't make it up and over its highs. If we take a look at this and we put this on a weekly basis, because that's what you want to do with all of these, to see where the whole thing is setting up right now. So a weekly basis, folks, we're going to end up doing about 425 million. That 425 is going into 577. That top price at 577 is 212.06. Now, we've only hit 211.94. What does happen inside the SPY, however, and this is what you want to be cognizant of, is because of the dividend and expense ratio that is out there, that makes a difference in the price structure. You go over to the cash S&P, and that's what you want to keep your eye on, is that the cash S&P, the high of the cash S&P is 2119.59. Yesterday, we got over that. We hit 2120.59. I suspect what you're going to see out here, we're going to close underneath that today. The real key is going to be, bottom line, how much under the 2119 do we close? The volume characteristic on the weeklies are going to be less. So the test is going to be, the test has already been made. The real key is going to be, can the market hold up? Now, NASDAQ. So we have with the NASDAQ, inside the NDX 100, this is what's driving it. And you know, Amazon, man, is a monster. And Amazon, what I expect to actually have out there, Amazon is at 447. It's hit 452. What's happening with Amazon is that's the aspect of the short position. It wasn't a huge short position, but there are, I think it's 6 million. Yeah, you get 6 million shares that are short. That's a big number. There's no doubt about that. You go up $50, you know, and Amazon, by the way, it looks that it's a 100-point ABC structure on the way up. Well, if I do it conservatively, it was an 89-point ABC structure on the way up. That's going to be finished in one day. That's how that's set up. If you do it from the bottom, it's a 100-point ABC structure on the way up, which would give you a price point up there of 466. You hit 452. So we'll see where that whole thing shakes out. Now, let's go back to that gold trade for a second. And I'm going to go over to the dollar index again. See, the dollar index is screaming that that little baby, as we're coming into this closeout here, wants lower price. What we have intraday, if you happen to watch Tiger TV, you're going to see that at 0830, we had volume on the way down. It just tested it on the way back up. And we had that test out here with 1,400 contracts versus downtown with 2,500. That couldn't make it above ice. Above ice would have been 97.65. We made it to 97.74. Basically gave it up. Pulling back once again. And the real key is going to be how do we pull back into this area? We go over to that gold contract. Well, actually, let's go to the GLD first. We go to the GLD. You take a look at the GLD. The GLD right now is testing the low once again. The first low that got established out there was 648,000 shares. And we look at this. You get 2 minutes left in the 10-minute deal. There's no way it's going to do it. You're 336,000 shares versus 648. If we go over to the actual contract, we take a look at the contract. What you have with the contract is this. The contract also is coming in for a test of the 1175. And the contract, the first leg down, we did monster volume, was 18,000 contracts. When that's almost 20% of what we've done thus far. The second one we're coming down right now, and you're coming down with 6,000. So that's what you're looking for a test on the way down. You know, I suspect it's going to push, particularly on a Friday. But bottom line is that there's no more sellers there. They'll spike it. They'll spike it and see what they can get underneath it. But bottom line is that now what you're going to have more buying pressure versus selling pressure. Dow Industrials right now are up 5. Nasdaq's up 35. S&Ps are up 2.5. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And, you know, folks, this is going to get wild, particularly next week, because if, you know, bottom line, over in Europe, okay, the Greece situation is really problematic. So coming across the tape right now, this is how this is shaken out. Now, I knew Greece was broke, but particularly I didn't realize they were this broke. So check this. This is pretty amazing. So Greece's cash-strapped government may get a brief relief in another debt payment next week, thanks to a public holiday. So they have to come up with $217 million. Now, this $217 million is just interest due to the International Monetary Fund. The thing that's bizarre about this whole deal, so that's not bizarre, but it's kind of where it works. All these payments that Greece has to come up with, basically just interest payments. And so when banks roll over, that's all that's happening. The banks are getting money back. The banks give more money so they can get their interest paid. But check this out. This is where this gets really bizarre. So what you have happening is that the payment that is due will be put off to May 6th. Now, the reason it can be put off to May 6th is that there is a holiday on May 4th, okay? That's how this is shaken out. But that's not the real news here. Inside this news, so check this out. This is amazing. Interest on the IMF loans calculated and paid quarterly using a 3-month period corresponds to the IMF fiscal year of May 1st to April 30th, okay? But check out when you talk about a country with no cash. Internal obligations, including payments to civil servants and retirees, are also becoming increasingly difficult just to pay, okay? So check it out. Wednesday, so today's Friday, Wednesday, the government is 400 million euros short in order just to pay the salaries and the pensions, period, okay? Now guess where they're getting all the money? The finance ministry so far has secured 160 million euros from where? From local authorities, hospitals, universities, and municipalities. The government ordered them to hand over their cash reserves to the Bank of Greece. The move can buy the government up to 6 weeks of liquidity, a person said familiar with the deal. The bottom line, folks, is that that's about as insane as you can even comprehend, okay? Bottom line, what does that say? That says, folks, the implosion over in Europe, okay, is going to have to do with Greece. Greece should be out of the euro and just get out, period, okay? Because that's the only way that they can get out of this whole deal. Because what the banks are going to continue to do, the banks are going to continue to suck everything out of them, the IMF. I mean, there it is right there. And so we'll see where this shakes out. Now, what does that mean for the market in general? What it means for the market in general is this. I'm going to go right back to the gold market again for a second, because the type of scheme that the banks are in, number one, bottom line is what? It's a paper market. It's particularly a paper market. The shock value is going to come in that I suspect what you're going to have is that the Greece is either going to get out of the euro, or Germany's going to have to come up with huge amounts of money. Either way, what do you have? What you have is that the paper aspect of the market is going to have some contagion in it, you know, because each and every time that you hear there's not going to be contagion, there's absolutely going to be contagion, because just in that aspect right there, you can see that the banks are owed all the money. So on their balance sheets, okay, everything looks rosy. Bottom line, it's not rosy because there's going to be so much money that has to be written off. You know, we'll see where the whole thing shakes out, but I suspect the volatility is going to be up there. If we go over to the DAX, and let's go look at the DAX in Germany. DAX in Germany right now, up 51 bucks. You're at 1775. But what you have is that the first to get go on the way down was the 17th. 17th of April, after basically making up a high up there of 12,390, it comes down, vicious volume. Bottom line, this is setting up lower prices to get into this 10,700 area, and right now we're at 11,075 area. We're going to see, this is going to be a summer of Greece once again. That's how this whole thing seems to be shaken out. We go over to the GLD, and what you're going to see is that the gold contract as well as the GLD is pressing that low, already rejected it once, or rejected it on the last 10-minute bar. The number we're talking about here is 112.87. Last bar, we got down to 112.92. You did that with 360,000 shares versus 687,000, and it's not going to make it on this one, too. That's what it comes down to. So now what do we need inside that market? Now you need buyers coming into that market. We go over to the dollar index. We take a look at the dollar. What we're going to see is this. This is going to get we're at, what, 1030 right now? Yeah, 1040 right now. What you're going to see is that as we close into the 1 o'clock area, you're going to see, well, first off, you have this. First off, you're going to have 1130, because 1130 is when Europe is closing. That is going to throw some volatility into the marketplace because of the fact of Greece in general. The 130 close in the metals market is going to have some action in it. And we'll see where this dollar stands as we close into it. When I started the program, you know, we were at 36,000 contracts. We're at 41,000 contracts right now. So that is saying that you're going to get the 57,000 contracts, because we already, this is in the dollar index, because we already broke the 97.17. We went to 96.60. We're at 97.36 right now. That sets up the ABC structure on the way down, confirmed ABC structure on the way down, which, you know, we'll see how it attacks this lower swing point of the 96.31. It doesn't have to do it today. It very well could get into that area, though, because as we come into this close, the close takes a bit out here. But as we come into that close today, there's going to be plenty of folks that are making their bets over the weekend. If we take a look at the euro right now, the euro is at 108, and the euro bottom line wants to get up to this 110 area. Some of the high volume stocks in this market right now, you have Microsoft up $3, you have Amazon up 57, Freeport McMoran has juice underneath it, that's up $1. Yeah, Area Pharmaceutical, that poor thing is getting killed. That's down $21. You talk about an equity getting smoked. That got smoked in an extraordinary way. Some of the Dow stocks, you get Caterpillar down 50, you got Oxy down 30, Walmart is up 20, we have 3M down 96. Inside the NDX 100, the move is inside the NDX 100. Biogen, okay, Biogen's down $23. That's an ABC structure on the way down. Amazon, ABC structure on the way up. Microsoft is up $3. You get Starbucks is up $2. You get Mattel up 86 cents. Let's go over to the biotechs again. So if we take a look at Biogen is breaking the B point with volume. The B point on Biogen had 990,000 shares. Your A point on this is the high, which is 480. Your B point is 407. You get $77, which is going to bring you down to 350. And 350, guess what? 350 is right where you gapped away on the 29th of January. So if we go to the IBB and we take a look at the IBB, because the NASDAQ, this is what's so wild, folks. Now, the NASDAQ, the IBB hasn't broken yet. So we must have GILD. Let's see what's holding that up right now. So Gilead's up 40 cents. Amgen is flat. It's interesting. REGN. So what's holding this up? Regeneron's up $4.67. That's going to be interesting watching this whole thing shake out, because inside the NASDAQ composite, it was the biotechs that were holding the NASDAQ composite up. There's no doubt today Amazon by itself is holding it up. Actually, well, Microsoft too. Microsoft, if we go over to Microsoft for a second, we look at Microsoft. Microsoft just filling the gap. Microsoft's still on a downtrend. You're up, Microsoft came off the high of $50. You're going to be on a weekly basis, yeah. Microsoft can make $47, but Microsoft had come down with a $437 million, and you're going to be up there with about $200 million. It's going to be wild watching this whole thing shake out, because what you have a lot of movement, and the most surprising thing out here this morning, though, is the aspect that the small caps, which are the strongest indice out there, can't make their high. The S&Ps can't make the high. The NASDAQ, which definitely came, the NASDAQ was the strongest indice. The NASDAQ, no doubt, is up there, but it's not getting price spread. We've only done 11 million shares inside the NDX 100, and what that is saying that there's a huge amount of equities inside the NDX 100 that are weak, number one. Inside the SPY, okay, evidently there's a lot of equities that basically are not performing, getting into higher price. Inside the Dow Industrials, what we have is this. You have Microsoft that's moving the Dow up. Merck is second, that's up 62 cents. Johnson & Johnson's up 80 cents. McDonald's is up 67. Taken away from it on the way down is that you have Goldman down 134, Big Blue's down 110. You get ExxonMobil off 56, and 3M is down 103. Let's go and we take a look at ExxonMobil. I can't get out of its way either. Interesting. The oil market. So if we go take a look at the oil market, because inside the Nadex platform, folks, you can trade currencies, you can trade commodities, you can trade indices. Bottom line, oil is a great thing to trade out there. Why? Because it's the same type of setup that it's a defined risk trade. And if you're trading oil, inside the futures market, bottom line is $1,000 a point. If we take a look at this right now, we're at $56.99. Yeah, see, this is saying oil wants higher price, man. This is going to be interesting watching this thing shake out. What oil did yesterday, folks, is this. Oil gets to 58.41. The last swing point was 58.82. We did that with 416,000 contracts. You're going into 270,000. You're backing down today with 162,000. That setup is saying that oil actually wants to get up to somewhere about $66. That's pretty intense, man. It's going to be wild watching that whole thing shake out and, see how the push gets up, and is that, in fact, just the dead cat bounce, because when you do take a look at oil, we pull this all the way back, what you're going to see is that this was a one-way ride. That was a one-way ride from $107 down to 42, and right now we're at a 0.23 retracement, I believe. Yeah, we're right there. A 0.382 is $67. So at 67, that is a normal dead cat bounce in a market that can get to much lower price. Our phone number is 877-927-6648. If you haven't test drove the Nadex platform, folks, come over to our website at TFNN, and we'll see where this little binary trade goes. You get, we're at 1047. It's got a long period of time left in order to get some movement going. And we will see movement. This is either going to, if we go over to that gold contract, this is either, they're going to try to press this into the 75 once again. We've been hanging around here for a bit. We just tested that lower area again, and it did reject it. Now, this rejection right here is really cool. This is why. Your first leg down, you had the 18,000 contracts. You try to push into it with 6,500. And what we've just done now, and you're right next to it, yeah, this is pretty cool. So watch this. You got to watch just the contraction of volume is dramatic, okay? So what you have there is that now you need buyers. There's no sellers. They're pushing, saying any more sellers, bottom line, there's no more sellers. Now we'll see where the buyers come in. And what you can expect on a Friday is this. You can expect a fast surge. The same folks that drove it lower, what you're going to end up seeing is a very fast surge driving it higher. That's basically like how gold likes to trade. Let's go over to the silver market. We take a look at silver. Silver, now the difference is this. The difference from gold and silver is that silver has been under its April 1st level for a period of time. That's the bad part. The great part, and this helps in the gold market right now, is this, is that silver came off this low of 1555. It's at 1568. It's moving, and you're going to see silver try to get right back inside this 1573 probably before I get off the air right now, which is pretty cool. Why is that cool? Because what that does, that sets up a higher probability that the dollar's going to continue lower, gold's going to go higher. It's a field day. This is Tom O'Brien. This is TFNN. Dow's down 8, Nasdaq's up 35, S&Ps are up 2, gold's down 16, silver's off 15. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow down 3, NASDAQ up 36, S&Ps are up 3. If we go over to this dollar index, wait till you see this, folks. This is pretty cool. So when we take a look at the correlation between the dollar index and gold, bottom line is that, you know, you have the dollar down, they're smacking gold around big time. And so what you're looking for is you're looking for divergences inside the deal, right? Okay, so what you have is this. The first leg down had the good juice in it. Okay, we got down to the price point of 97.04. You did 2,900 contracts. You try to get into the higher price point, but got stopped by the downdraft from last night at 0230. Then what do we just get? We just got a little nice, huge piece of information. And what it was is this: is that you just had this another seller come in. 2,100 contracts, just took it from 36 to 11. What you're doing here is you're building cause to get into this lower swing point from this morning of 96.90. Now, what you simultaneously do is this. Simultaneously, you want to go over to the gold contract and see, okay, did they hit gold simultaneously? What are they doing there? Okay. Well, bottom line is that what you can see inside the gold contract is that no, you already tested the low, and what you're doing, you're getting ready for this expansion topside. I suspect, you know, we're at 77, and I know it seems almost impossible. How can it get up to 85? I expect that's where we're going to be before 1:30 in the afternoon. Let's go to Hugh in Boston. Hey, Hugh, what's going on?
Hey, Tom. This is Steve from Boston. How are you?
I'm doing great, man. Thanks for calling. Thanks for holding. Appreciate it.
First, I want to congratulate you on call on Raleigh 2 days ago, up 20% plus.
No, thank you, man. I saw that this morning, and I really appreciate it. What happened, folks, is that, you know, we got this in the gold report, and it's a rocket ship, and it's pretty cool. Yeah, I'm glad you got it, man.
I've been watching this stock for almost $5 and a little below.
Right.
And got into around that time, but not sure when to get out of it. I mean, so I'm just wondering, is your price still 883 the target, or can go higher?
Yeah, I wouldn't get out of it, period. What will happen is this, I suspect. What you're going to have now is this. You get 3 huge volume days. You get the juice. Yeah, the longer-term aspect, it broke the whole trend, so 1493 is on the agenda, okay? We'll get flack at like probably $10. Where I'm going, Hugh, is at 10.61. If you put this on a weekly or if you're watching Tiger TV, we'll get flack there. That's ice, okay? So what I expect we'll probably do is sell half of it and get the other half for free. That's how I'd trade this out.
Yeah, that's
I wouldn't move it, because what you have is this, okay? It's an equity. This equity, folks, absolutely got killed, okay? You know, when it's down from $45, and you know it should have got killed because no one really knew that you had iron ore go down, but simultaneously you didn't know that, okay, is the Petrobras scandal going to go into the Valley scandal? And that was the biggest risk. But this is a company that takes in $100 billion, you know, so.
Yeah, and the same thing, I'm looking at the Petrobras that I got into around like 5.
Yeah.
And it's almost doubled, and I'm holding on that one as well for like a long time. What do you think on that one?
You wanna, man. Those stocks aren't going away, okay? And that's how you can really build something big. It's patience, patience, patience. When you jump, and then just don't go over your head, man. Do you know what I mean?
Do you think Petrobras is still like time to add more, or no, don't bother?
You know what? I'll tell you what. I'll put Petrobras in the Gold Report Monday. I'll do it that, okay?
Okay.
Okay, man. You stay right there,
right,
folks. Our man, Mr. Basil Chapman's coming up next. And there goes gold. Gold's moving, folks. This is going to get action. You stay right there. Basil's going to be coming up, then Nico and Paige and Dave White, and we'll be back this afternoon. Have a great one. Have a safe one, folks.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.